Good day, fellow investors. Evolution Gaming stock has been the most requested stock for me to analyze, I think, over the last few years. I got emails, I got everything about this online gambling software maker, and it is not my kind of business, but as we discussed with Howard Marks, it's not what you buy, it's what you pay that counts. Good investing doesn't come from buying good things, but buying things well. There is no asset so good that it can become overpriced and thus dangerous, the current bubble, and there are a few assets so bad that they can't get cheap enough to be a bargain. Let's see whether Evolution AB is now a bargain, more than 60% down from the 2021 peak. Let me tell you immediately, yes, it is a bargain. Looks like an investment that will deliver returns, but you have to know more about it to see how it fits your portfolio. And then it is also traded in the US, it's an ADR, but I think 40% of owners is from the United States, so BlackRock, Vanguard also. Nice ownership there. Also the owners still hold a big stake, so they are developing. And let's start with the business overview. So it develops, produces, markets, licenses fully integrated B2B online casino solutions to gaming operators. They have grown fastly over the years, and their customers are more than 600 operators, including the majority of Tier 1 online operators and several also land-based casinos that are going online. I never use these things, I never gambled, so this might be familiar to some of you perhaps. And they also are active in the fastest growing online casino segment that has had a huge growth rate of 38% annually over the first 5 years, then with the pandemic even faster. And their business model is, okay, the end user goes to the gaming operator and Evolution has all systems in place so that the gaming operator can provide the service, and Evolution does that at scale, and they give, I think, a 15% fee to Evolution Gaming. The revenue model is that so access and streaming from generic tables, while more complex agreements can include dedicated tables, VIP services, environments, native speaking dealers, and things like that. Very, very interesting. Let's check the annual report for more information. The highlights: 110 new games, new studios where they deliver the service, market expansion continues. I think they are building one in the Philippines, more tables, long-term trend of growing force, and innovation, global growth, and aiming for even greater highs. Now, value creation there, retain, give also dividends. I think it's almost 4% dividend yield, and that will likely continue because the numbers are good. Medium to long-term objectives, dividend, dividend, dividend. With the growth they are achieving, it will be a growth dividend, and they want to grow faster, 23% growth in 2023, slowing down a little bit, but still growing fast. If you look at the marketplace, live casino, growing, growing, growing. Of course, these were pandemic years, a lot of people at home, but the trend and the business is continuing. We'll discuss the market later. They focus on growth, and they also want to remain the key leader of the market. I think they have 40%, so they want to scale, and they're investing about 100 million a year, a little bit less, on that market leading position that they want to expand. And you can see they build these global studios. They have 20,000 employees, and they have this one single one-stop shop for operators where you get everything in one place. When it looks to customer dependency, the top customer is 13% of the business, which is significant. Top 1 to 5, 41%. So this is a little bit, let's say, also one of the risks, because if someone can integrate 1 to 5, offer, I don't know, 10%, because we'll see the margins Evolution has are huge. This is one of the risks, but likely they can keep their position, negotiate, things like that, and keep growing alongside the market. Now, the stock is down, as we have seen, and the reason the stock is down, I think, is the following. Because total revenues growth was 90% in 2021, and logically, after the boom, it went down to 23%, and now it is, what, something in the high teens, if I'm not mistaken. And that's usually the case. The market looks at something 90% growing and they think it will continue to grow forever, but that usually then reverts to the mean. However, there is then one trend, market growth, business quality, etc., then tells you whether something is a buy or not. Perhaps it's even more like this, or now with size and everything maybe like this, but I think now the stock is, from that perspective, below trend. The market capitalization is 177 billion Swedish krona, 11, so what's that, 15 billion euros, P ratio 13.54, dividend almost closing into 4%. Now, they made a smart acquisition just at the beginning on the pandemic 2020 of 2 billion, that's also the goodwill on the balance sheet. Nothing wrong with that, and that also increased the growth over time. You can see the revenues especially exploding pandemic, and now that is slowing down, but they have been growing constantly for the last decade, and likely they will grow as long as the market continues to grow. 12%, that's one from Polaris prediction up to 2030. Statista is a little bit more cautious with 5% growth for online betting and casinos. So it is certainly a growth market, but slower growth of 5.5%. Maybe some inflation, some this, some that, but still growing. User penetration will also likely grow with 6-7% of the population, except in Canada. What you doing, people there? I know the nights are cold and long now, but 74% user penetration in Canada. Better buy stocks, not gamble with this. Nevertheless, this is the situation. If we look at the, let's say, average growth rate between 5 from Statista and 13 for Polaris, if they can just grow at market averages of 8%, the dividend will grow like that, and then at current valuations, you have a 12% long-term return from these prices. Now, what are the issues? There are issues, and it's not just a slowdown in growth that is reflected in the stock price. Evolution, gambling commission review, is everything okay for Evolution software? And Evolution is 3% revenue from the UK market, so it can't be such a bad hit. They are diversified globally, and here we have revenues even going faster up, sorry, mistake earlier, 27.9%. All the numbers look staggering, and even despite their strikes in their 7,000, 8,000 workers in Georgia, where there was a strike, there was a stoppage, there were some issues, the CEO says that's disinformation and blunt lies. It's Georgia, it's a hanky-panky situation there. We don't know, I haven't been there. They say in the conference call that these are the pictures from the facilities, that 70% of people are still working and happy. So it was just some issue, and those issues will continue like that over time, because when you have 20 studios, 20,000 people globally, you know that there is always something. There are other things, cyber attacks against Asian video distribution, so someone is stealing the content and then having people play with others. Very interesting. Further on, Georgia, 300 participants striking out of 7,000 to 8,000, but they are 70% capacity and they are firing those people that are striking. So that's something interesting. Nevertheless, they are also building new products and studio in Brazil and the Philippines. Other ideas to bet with famous persons, streamers and influencers in an entirely new way to play. So maybe we can create betting gaming. Okay, let's look at the geographic breakdown. Europe, Asia, Asia is very strong here, so that's what smartphones bring. With more than Europe, North America, less likely there is some competition if they came later. Share of regulated markets is 40%, 39%, so doing very, very well. If we look at the P&L, this is incredible. So revenues 500 million, I think it's euros for the quarter. Look at the profits, 379. What's that? 75% operating profits. Okay, then we have taxes. So taxes in Germany, what, or France, maybe 50% coming next, which is then a risk to regulation. But huge operating profits, hugely profitable business, huge cash flows that allow for reinvestment and paying dividends. The outlook: new games, execution of capital returns, dividends, growth, new studio in Czech, Brazil and Philippines, as we said. Now, they will come with the guidance, but they don't see a structural difference in evolution going forward, so the guidance will again be 20% growth. Again, nothing wrong there. Asia is slowing down a little bit, cyber attacks, Japan blocking payment, but when you work in 180 countries, that's normal. And they say with the cyber attacks, it will not get so fast, so they will need a couple of quarters because they get to the pattern they had before. Now, conclusion: 12% growth, 12% return on investment now. However, there are risks, expansion, strikes, it's a sin stock, whatever you look, cyber attacks, so you have to see how that fits your portfolio. But from that, it is, the name of the game from here is growth versus bad news. That's something we cannot predict, we cannot foresee from cyber attacks. So when it comes to this, if you're happy with 12%, you have to find a strategy, focus on fundamentals and create a strategy under those fundamentals. The stock went down 40%, which means it can go up 70%, or it can continue to trickle. But if the fundamentals keep improving, maybe you have to have a strategy where you know that you're buying, reinvesting the dividend, etc. Personally, I don't do insurance, banks, tobacco, arms, and gambling online, blah blah blah. So it's not personally for me. I would not feel well owning this. So I just wanted to make a video, give you my opinion. I know many of you have asked about it, so here it is. Next time when someone asks, I'll just send him the link. I hope I have given you value, I have given you the risk and reward, the strategy around it, and again, it is personal, your money, my money, so just simply not for me. Thanks for watching, subscribe for more similar analysis.